All right, today we'll be discussing the Q2 2026 SpaceX earnings, their first earnings ever. And I personally thought they were fantastic. It's really hard to get a quarter much better than this with commentary any better than what we got. We'll dive into this. This is the SpaceX Bagholder podcast. I'm your host, Smelly Fingernail. I will say to start off that our own predictions, which we've made in the previous episode, were really spot on. So I'm not going to go over and compare the predictions to the actual results. If you want to see the predictions, you can look at the previous episode. But in general, this is looking good going forward in terms of modeling future earnings. All right, so we're going to get right started. And we're going to start talking about the big one here, which is the AI segment. Again, we'll talk about each of the three segments: the space segment, the connectivity segment, and the AI segment. But really, the driver of revenue inflection going forward for the near term is going to be from the AI segment. And the headline here is really the revenue. So in Q1, the total amount of revenue coming from the AI sector was 818 million. For Q2, we're up to 2.5 billion. So we've already tripled in a quarter, and this is only going to go up from here. Again, most of this is coming from compute sales. The only compute sale recognized in the second quarter is the Anthropic deal. So the Reflection deal, the Google deal, all the additional deals that SpaceX has made in terms of selling its available compute at Colossus 1 and Colossus 2, that's not going to be recognized until Q3 and Q4 going forward. So like each quarter is going to look much better than this, and this is already looking fantastic. The way these deals are structured is actually the initial startup months. It ramps up slowly in terms of how much we're getting paid. So. Uh, the amount of money that Anthropic paid to SpaceX in this quarter for the GPUs that they rented out is actually going to be lower than in the future. So in Q3, we're going to make more from Anthropic, and in Q4, we're going to make more from Anthropic, in addition to the revenues from Google and the other ones coming in. So this is the lowest the AI segment is ever going to make, and it's already pretty high. And we'll take a look at some of the other things. The other thing that you see from the earnings in the segment is that the segment adjusted EBITDA has moved positive. This was previously negative 600 million, and now we're positive by over a billion. So that's another good thing. It's the segment as a whole is not as of yet profitable. So the operating income from the segment is still negative, but we're looking to see that change possibly in Q3, but almost certainly by Q4. Taking a look at the actual loss from operations number for Q1, the number was over 2.5 billion. I mean, just under 2.5 billion for the AI segment. And in Q2, that number has been cut in half. So the loss from operations on the AI segment is now only 1.2 billion. And again, this will be cut drastically going forward because the margins that SpaceX gets from its compute is extremely high. So we're talking about 70 to 80% margins on the GPUs that it rents out. So this number will be almost zero. I'm estimating around zero, could be positive by the time we get to Q3. And by Q4, this is going to look very good. It's going to be, I probably think it's well over a billion in income from operations in those segments. So this might be the last time we ever see a negative number here on income from operations on the AI segment. And how fast SpaceX is able to continue increasing revenues in the AI segment is, of course, dictated by how quickly they can bring compute online in terms of gigawatts. That's how they're measuring it. They do publish this metric in their earnings report. So in Q1, they had 1 gigawatt of available compute. In Q2, it's 1.4 gigawatts. So in one quarter, they've increased the amount of compute they have by 40%. And in the call, Elon did call out by the end of the year, we're expecting over 2 gigawatts. So that's, again, another over 50% increase in compute. So this is very good because, again, the rate of return that SpaceX gets on these GPUs are really unheard of. They're like nothing else in the world of business right now in terms of how quickly the payback period is. Like, for example, they said on the call, the they make back the cost of bringing a GPU online in just over a year, and then everything from that point on is just pure profit. I really don't think there's anything else out there in the AI infrastructure world that has the rate of return that SpaceX is getting on these things. And it really, what we are betting on is that SpaceX is capable of bringing these data centers online. That's the real hard part. But in terms of, if you think about it, like what company out there exists in the world which is able to move around objects in the physical world as good as SpaceX? And you really can't think of anybody. SpaceX is definitely the best company when it comes to like real world stuff. You can there's any number of companies which are good in software or etc. But the differentiator here that Elon brings with his companies is the ability to get things done in real life. And that's where the money's going to come from. So it's looking very promising on this part. He did say in the call that he's expecting 10 gigawatts to come online by the end of 2027. That seems a little bit out there. Like if that were true, we'd all be insanely rich in less than a year. But I personally, I'm counting it as I'm estimating around 6.5, and that would still be great. But again, the main thing is he's very confident in his ability to bring power online, and there's no reason to doubt him. So let's see what we're at going forward. The 2 gigawatts by the end of the year is definitely a marker, and it's definitely an achievable marker. So we'll be on the lookout to see the progress he's making at Colossus 2. There is an innovative new data center that he's creating there called Mini Hard. It has the same capacity as Macro Harder or Macro Hard, and but it's like in a much more concentrated area. So let's see if they can get that figured out. Again, the more innovations they can achieve in data center construction, the quicker they'll be able to bring on additional data centers, and the more money that we'll all make as shareholders. We did not get any commentary about Cursor this quarter. That's because we know that SpaceX is going to buy the company, but the deal does not close until Q3. So Q3 is really the first time we're going to be able to crack open the books over at Cursor and see what's going on there. We know that their revenues are growing extremely quickly with and their margins are improving drastically as they move their inference off of the Anthropic and OpenAI models into their own Composer models. And again, Composer is a fine tune off of Kimi. So because Kimi K3 was good, we're expecting Composer 3 soon. And again, the margins will continue to improve at Cursor as the mix shift of inference continues to go towards their own first party models. So that should be looking pretty good. But again, we won't be able to see those numbers until Q3. So really the headline from the AI compute segment of SpaceX's earnings is that they're full of momentum and there's really nothing stopping them. Profitability is going to come really quickly. Like by this year, they will be extremely profitable in this category. And as long as they're able to continue to bring online additional data centers, then the profits will continue to grow. And what you're betting on is really that SpaceX is able to bring on these data centers. And that I think is a given. So it's looking very good in this category. You really can't see any negatives in the AI segment. Now, what the bears will latch onto and what everyone's going to latch onto is this capex number because the capex number is very high. Let's take a look at the capex number here. The capex number just for this quarter is 15 billion. And that number is going to increase drastically quarter over quarter and year over year for the foreseeable future. In order for SpaceX to bring online 10 gigawatts in 2027, this capex number is going to be in the hundreds of billions. So, if you're a SpaceX investor, you're going to have to just deal with it. Like we have to understand what is happening here at this capex number and be completely okay with it, understanding that the rate of return on the capex is extremely high and that we're going to get value for it in the end. So if people say the capex number is high, that's true. And we all have to understand that this is what we're signing up for as a SpaceX investor. Like understand, for example, the perfect example is Amazon. For years, Amazon never made any money because its capex was ludicrous. It would reinvest every cent that they would make into their own company. They could be Amazon could have been profitable at any time after a certain point in the mid 2000s. They chose to reinvest this money by spending on capex, and that's what SpaceX is doing. So like again, we had to be fully supportive of SpaceX's capex spending plans, and we have to understand that in 2027, the AI capex is going to be in the hundreds of billions, and we need to have our own mental models in account for this. So don't never get freaked out by a capex number, especially in the AI segment when the rate of return is as high as what SpaceX is giving us. All right, now we're going to talk about the Starlink slash connectivity segment along with the space segment together. Now we're going to put them together because they're very interwoven. For example, space recognizes revenue. Now its revenue in Q2 was 962 million versus 619 million in the previous quarter. But like the number really doesn't mean anything because they only report revenue for customer launches. So they launched 38 times in Q2, of which 10 were customer launches, and they're recognizing revenue from the customer launches. When they launch an internal payload for Starlink, that revenue is recognized differently and the costs are recognized differently. So the number of the revenue that you get from the space segment really doesn't mean much in and of itself. The important thing is uh, maintaining the relationships with the government. For example, that would be something that would go in this segment, and maintaining commercial relationships. But again, these are peanuts compared to what we're really going after in terms of revenues. So keep that in mind when we're talking about space revenues. The other important part of the space segment is that's where all the R&D costs for Starship are recognized. So over here you'll see R&D costs of over $1 billion, which is why the space segment is which is negative operating income. If all SpaceX were doing were to serve customer payloads, they would be extremely profitable in their space segment, but that's not what they're doing. And they're serving mostly internal payloads, and they're recognizing some revenue from customer payloads, and then they're deducting this is, and then they're gonna have to take into account all the costs of the starships. So the massive loss here is because of Starship R&D. The launches themselves are very profitable, and they're used to support Starlink. Now, Starlink is the connectivity segment. This is the traditional cash cow of SpaceX, and it's still bringing in a lot of money. The revenues for this quarter are 4.3 billion compared to 3.2 billion last quarter. So this is up 32% sequentially. That's a lot. What's going to really drive this up in the future, though, of course, is when capacity is brought online via Starship. When Starship is launching regularly and it's delivering Starlink V3s, these are orders of magnitude better. These have an order of magnitude more capacity than the Starship V2s, and there's going to be a bunch more of them. So this number is going to be ramping up extremely quickly in the very near future. In fact, they've already announced that Starship Flight 14, which should be out by the end of the month, will be delivering the first ever orbital payload of Starlink V3s. So it's going to start this month, and the cadence is only going to get quicker from then. The number of total Starlink subscribers have gone up to 12 million. Honestly, I expected this number to be a little higher because I think Elon already announced 12 million sometime in the middle of Q2. So I thought this would be higher. I'm not sure if there was a sandbag number here. I'm not sure if they're allowed to do that, but that's the number. So it's 12 million Starlink subscribers. That's a double year over year and up 1.7 million over the past quarter. Very good growth. And importantly, the ARPU here stayed at $66. So my model had ARPU going down because again, they have to. Um, they're opening up Starlink in more and more countries, and some of these countries are not exactly developed countries. They'll be opening this up in like some African country, some South American country, and the amount they're charging is going to be less to account for the local purchasing ability of the citizens in that country. So you would expect the ARPU number for Starlink to go down over time. And that's to be expected, and that's fine, especially with the increased capacity of what SpaceX is able to sell with the Starlink V3 satellites are going to be going up. So beyond the residential customers, of course, the other two important segments of the connectivity segment of SpaceX is governments and commercial. They have been absolutely crushing it on the government section because the military is paying them enormous globs of money for like their own specialized version of Starlink called Starshield. So just in this quarter alone, they were given $6 billion of additional contracts for Starshield. So again, that's something that's just going to be a very high margin business for the segment coming in, and there's just going to be more and more wins here because there's no other legitimate competitors who can put up as many satellites as SpaceX. Another thing here is the commercial. So like this is when an aircraft, not an aircraft carrier, if we call it an airline, will install it onto their planes, and then customers will be able to use it. That's also gaining significant traction. They've won additional airlines include Southwest, Virgin Atlantic, and so on. So again, there's hardly any competitors here because the other competitors don't have their own launch capability. Like Amazon wants to set up their Leo, but of course Blue Origin can't get off the ground right now. And this is really a monopoly for SpaceX. So this is going to be the cash cow going forward. Not going forward, but like currently before the AI segment really kicks in. The income from operations for this segment was 1.6 billion for this quarter versus 1.1 billion in the last quarter. So just over one quarter alone, we gained over $500 million of income from operations. So again, this is really important in terms of the story and the narrative. Like, why isn't SpaceX just completely losing uh, zillions of dollars each quarter? It's because Starlink is carrying the company currently when it comes to income. Looking forward, the real unlock when it comes to total addressable markets will be the direct to cell and other connectivity arrangements where you don't need a specialized receiver on the ground. So when they put up the Starlink V3s, supposedly this will allow you to connect the Starlink with your phone without like a dish on your roof or something like that. So of course this is a huge market. You'll be competing against T-Mobile, Verizon, and so on. And I'm guessing that the service is going to be a lot better than anything you can get with any other carrier. And there's not going to be dead zones or anything. You could be in the middle of the desert and you should have plenty of service because of how Starlink works. Now, the important thing to watch out for is how they manage to implement this. If you go on Twitter or you look at the discussions you have online, you'll see a lot of like, how is SpaceX going to do this? How are they going to? Because apparently the spectrum that they bought, it will penetrate. It's able to hit your phone if you're like outside in some pristine environment, but there's a you're having trouble if you're inside your car, if you're inside a structure, and you really just have to assume that SpaceX has figured this out. There's no way they're going to be launching this service. They're going to put all these satellites up. They're going to start a direct to cell service, and then they're going to realize at this point, oh shit, wait a minute, we can't. There's no service inside of a house or inside of a car. So there's no doubt that they have this figured out, and the people who are bringing up this limitation, I don't think they're really accounting for like the business people at SpaceX here. Like, do they really think that like SpaceX was going to launch this product and you wouldn't be able to connect in your car? There's no possible way. So I'm expecting once you have a number of launches, maybe by Q1 perhaps of next year, there needs to be a significant number of V3 satellites in the air. So we don't know when this service is going to go up, but when it does go up, the amount of money that's going to be flowing into the connectivity segment is going to be extremely high. And when it comes to potential customers or potential sources of revenue, when it comes to connecting to Starlink with these new V3 satellites without the need of any sort of dish, it goes well beyond like you or I trying to figure out how we're going to connect to the internet with our phones. Like, there's going to be plenty of other applications, like any number of IoT devices that are out in the wild. Like, even your car, for instance, now needs internet connection. Like, I imagine that could be a customer here. An interesting customer potential that was brought up during the conference call by Gwen Shotwell is the idea of like robots. Like, you have robots or autonomous humanoids out there that would need some sort of internet connection, and it would make a lot of sense if they were just connected to Starlink. So again, there's any number of customers that this would unlock that is certainly not limited to you or I or Joe Blow in the garage, right? So this is very positive, and it's all enabled by the Starship V3s starting to launch at a regular cadence. Now, again, Starship 12 and 13 launched in Q2, and they were very good. And then because we know that they're going to start delivering orbital payloads with 14, you can really expect a monthly cadence for this going forward. So we'll see if they have any additional announcements about when the service is going to go live, but it should not be that much further into the future, especially if we're launching Starships every single month. So really, all in all, I couldn't find a single negative in this report. This was a highly positive report. They gave a lot of it's not like official guidance, but it's really just Elon's going off the riff. They said that by December we'll be looking at something like a $100 billion run rate for the company as a whole. That's huge. That would mean that the price of sales, the forward price of sales at the end of the year will be something like 10 or so. So again, that's very good. The I like it when very lofty targets are given. Like, we internally have to understand that 10 gigawatts next year might not happen for the AI segment, right? We let Elon say 10 gigawatts. Internally, we're going to prepare for 6.5 gigawatts, but even 6.5 gigawatts is over triple of what we're going to have at the end of this year, and that's going to be a lot of money coming into SpaceX's coffers. Another thing that was said that was a very lofty goal by Elon was he said that by the end of 2027, SpaceX might be looking at something like one Starship launch per day. Now, I really don't think this is going to happen. Like, that seems very far fetched. I'm not counting on that happening at all. It's very funny to hear him say it, but like internally, we have to understand that this probably isn't going to happen. Like, we're hopefully by the end of this year, we are at a stable monthly cadence. So, and then by Q1, again, I'm expecting a monthly cadence, so 3 launches in Q1, and then we're going to ramp over the course of 2027. I think an achievable goal that will already be very good for the company and more than enough to satisfy its growth needs to grow into its valuation is something like a launch every other week. So 2 launches a month, I think is very attainable by the end of 2027, and that will be my internal sort of goalpost for where we want to be at. Another thing briefly touched on was the NVIDIA exclusivity. I am very much in favor of NVIDIA exclusivity here. This is because the alternative to being exclusive with NVIDIA most likely would have been creating your own ASIC, which I am very much against. Again, so understand that like GPUs versus ASICs. ASICs are better when you have a very solid understanding of what you're trying to compute against. A classic example of this is Bitcoin mining, right? Because the Bitcoin mining algorithm is known and it's not going to change. So if you were around in 2012, 2013, this is when the change in the miners really happened away from GPUs towards ASICs because you can design a specific compute unit against the algorithm used to mine Bitcoin. Now, when it comes to LLMs, the underlying models and their architectures are changing so fast. It's really a bit crazy to design an ASIC right now. Like for example, very famously, DeepSeek does not run well on Google's TPU ASIC. Like what these companies, Google and Amazon, they'll design their ASIC in like in cooperation, in coordination with like a frontier company, and the frontier company, like when it's co-design, will make their underlying model architecture such that it's compatible. But right now, this is changing so quickly. Like, how can you possibly reliably make an ASIC? So this what this really means for SpaceX is that their manufacturing plant, their Terafab, which they're building in conjunction with Tesla, is probably not going to be used to make an ASIC. They're going to be used to make uh, other inputs, other commodities going in. Memory is one I'm really looking forward for them to produce. Again, memory is one of the primary bottlenecks right now. Will it be a bottleneck by the time Terafab gets up? I don't know, but it's always going to be in demand. And it's something that's much more achievable for SpaceX. Again, when you're talking about what SpaceX and what Elon specializes in, they really specialize to make things that are like eminently possible happen quickly. When it comes to manufacturing memory, that fits into the slot like a glove. Like you know how to manufacture memory. It's just a pain in the ass to get all the equipment up and into a building and get started. Like you need so much capital to do that, and it takes a lot of energy. So, but that's definitely something he's good at. Whether or not SpaceX can create their own specialized inference compute chip, that would be very much up in the air. So I'm glad they're not going that direction. So that's big news. Also, big news is their NVIDIA and SpaceX will collaborate on making the new NVIDIA chips, the Vera Rubin chips that are coming out, work in space. So this is not something we're really expecting at volume anytime soon, and certainly not in the rest of this year, and not much in 2027. But going forward, of course, this is what we're putting our chips on. We're putting our chips on orbital compute. And in order to make orbital compute really cost effective, you do need the underlying GPUs to be able to function at higher temperatures than they are now. Like if you have like right now, GPUs say function at some temperature, right? And in order to keep it within that range, the SpaceX would need to put a lot of radiators out. Now, that's what they're planning on doing, but like it would be like if there was a partnership such that NVIDIA knew that their chips, maybe they need a specialized version that's higher heat tolerance, it would make it much easier for SpaceX. Now, that's not their current plan. They very explicitly stated that they're going to put the same racks in space as they would on Earth. So we'll see how that goes in 2027. Again, we're looking for maybe a few demonstrators. We're not looking for at any sort of scale. We really just want to send maybe a couple up, hopefully 1 or 2 or 3 missions where we just get some demonstrations on whether or not it's capable of producing inference. Surely it should be capable. and that's something to look forward to. But again, this is a marginal part of the story until at least 2028. And that pretty much wraps it up. Really, there are I could not see a single thing to nitpick here. Like, if you talk to anybody random on the street, they'll talk about capex. But again, we talked about that earlier. We want as much capex as possible, and that's the type of investors we have to be if we're investing in SpaceX. So that's certainly the type of investor I am. I want them to spend as much capex. If they need to raise money through debt, if they need to come up with any sort of deal, if they need to come up with vendor financing with NVIDIA to produce their chips, I'm in favor of whatever it takes to raise the money to spend on these chips because they're extremely profitable. So my morale is extremely high. Everything looks very good, and I'm very much looking forward to the future here. And that's pretty much it. So again, let me give a quick recap on my position so you see how much I'm back holding. I currently have 1,546 shares for a weighted average of $208.65. So again, I am the world's number one bag holder, Smelly Fingernail, and you've been listening to the SpaceX Bag Holder podcast. All right, see you.